You need to hear this if you're an average person. Recessions create massive opportunities for the wealthy. We're going to talk about how the rich get even richer during recessions. It's crazy, but these economic downturns actually create massive opportunities for those who know where to look. In this video, I'm breaking down 14 mind-blowing strategies that the wealthy use to multiply their fortunes when everyone else is panicking. Let's get into it. Alright, let's kick things off with government bailouts. You know, when the economy tanks, the government steps in to save big industries from collapsing. But here's the kicker. These bailouts often end up benefiting the wealthy way more than the average Joe. It's absolutely insane how this works. Take the 2008 financial crisis, for example. The government pumped billions into banks and auto companies. Sure, it saved jobs, but it also protected the assets of major shareholders and executives. These guys basically got a get-out-of-jail-free card while small businesses were left to fend for themselves. Now let's talk about government bonds. When the economy goes south, these babies become super attractive to investors. Why? Because they're considered one of the safest places to park your money during turbulent times. It's like a financial bomb shelter for the wealthy. Here's the deal. As more people rush to buy bonds, their yields go down. But for the rich, who can afford to buy in bulk and hold long term, it's still a win. They're basically lending money to the government and getting guaranteed returns. Plus, in some countries, these bonds come with sweet tax benefits. Check this out, guys. Some of the richest investors actually make their biggest gains when the market is tanking. How? By short selling. It's a strategy where you bet against stocks or entire markets. Sounds crazy, right? But it works if you know what you're doing. Let me give you an insane example. Bill Ackman, a hedge fund manager, turned $27 million into $2.6 billion in just 1 month during the 2020 market crash. That's not a typo billion with a B. Alright, here's a strategy that's simple in theory, but tough in practice. Buying assets when they're dirt cheap. Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." And man, does he practice what he preaches? During the 2008 crisis, Buffett invested billions in companies like Goldman Sachs and General Electric when their stocks were in the gutter. Fast forward a few years, and those investments paid off big time. The rich have the cash and the courage to buy when everyone else is selling, setting themselves up for huge gains when the economy recovers. Now, let's talk about something that doesn't get enough attention: renegotiating deals. When a recession hits, everything's up for grabs. Contracts, leases, supplier agreements, you name it. The wealthy and big corporations use this time to squeeze better terms out of their deals. Think about it. If you're a big company and your suppliers are struggling, you've got the upper hand. You can push for lower prices, better payment terms, or other concessions. It's a way for the rich to cut costs and boost profits, even when the economy is in the dumps. Pretty clever, right? Guys, this next strategy is absolutely insane. During a recession, a lot of companies go bankrupt or come close to it. For most, this is a tragedy. But for cash-rich businesses and investors, it's a golden opportunity to buy up competitors or their assets for pennies on the dollar. Let me give you an example. During the 2008 financial crisis, J.P. Morgan Chase bought Bear Stearns, an 85-year-old investment bank, for just $10 per share. A year earlier, Bear Stearns stock was trading at $170. That's a 94% discount. J.P. Morgan basically got a major competitor for next to nothing. This kind of move allows the big players to expand their market share and come out of the recession even stronger than before. Alright, let's check out one of my favorite topics: real estate. During a recession, property values often take a nosedive. Foreclosures go up, people can't afford their mortgages, and suddenly there's a ton of real estate on the market. For the average person, this is terrible news. But for the wealthy, it's like Black Friday for properties. Check this out. After the 2008 housing crash, investors with deep pockets swooped in and bought up thousands of homes at rock-bottom prices. They either flipped these properties for a profit when the market recovered or turned them into rental properties for steady income. Some even formed huge real estate investment trusts to manage all these properties. It's crazy to think about, but some of the biggest landlords in America today built their empires during the last recession. Now, here's a strategy that's so wild it sounds made up. But I promise you it's 100% real. Some savvy organizations actually had pandemic insurance before COVID-19 hit. Yeah, you heard that right. Pandemic insurance. And when the virus spread worldwide, these policies paid out big time. The craziest example, Wimbledon, the famous tennis tournament. They had been paying about $2 million a year for pandemic insurance since 2003. Everyone probably thought they were nuts, right? Well, when they had to cancel the 2020 tournament due to COVID, that policy paid out a whopping $142 million. Let's talk about one of the most powerful tools in a wealthy investor's arsenal during a recession: leveraging low interest rates. When the economy tanks, central banks often slash interest rates to stimulate spending. For the rich, this is like being handed free money to invest with. It's absolutely insane how much this can amplify their returns. Here's how it works. They borrow huge sums of money at these rock-bottom rates and invest it in assets that are likely to appreciate when the economy recovers. We're talking stocks, real estate, businesses, you name it. Even if these investments only yield a modest return, the spread between the interest rate and the return can result in massive profits. Now, this next point might be a bit controversial, but it's a reality we need to talk about. During a recession, unemployment skyrockets. For workers, this is devastating. But for businesses, it's an opportunity to cut costs and boost profits. I know it sounds harsh, but this is how the big players think. When unemployment is high, companies can often hire skilled workers for lower wages. They might also use the recession as an excuse to lay off higher-paid employees and replace them with cheaper labor. Some businesses even use this time to automate more processes, replacing human workers with machines. It's a tough pill to swallow, but this cost-cutting often leads to higher profits when the economy recovers, making business owners and shareholders even wealthier. All right, let's check out something that the ultra-wealthy are experts at: protecting their money. During a recession, the rich often move their assets around to minimize losses and avoid taxes. It's like a high-stakes game of financial hide-and-seek. And let me tell you, they're really good at it. One strategy is using tax havens, countries with low or no taxes where they can park their money. Places like the Cayman Islands or Switzerland become very popular during economic downturns. Another key move is diversification. The wealthy spread their money across different types of assets and geographical locations. This way, if one market tanks, they're not losing everything. They might have stocks in various countries, real estate in different cities, and maybe even some gold or cryptocurrencies. It's all about not keeping all your eggs in one basket. Here's something interesting. During recessions, governments often launch big infrastructure projects to create jobs and stimulate the economy. For construction companies, engineering firms, and savvy investors, this is like hitting the jackpot. It's crazy how much money there is to be made here. Think about it. When the government decides to build new roads, bridges, or public transport systems, billions of dollars start flowing. Companies that win these contracts can make a fortune, and it's not just construction firms. Suppliers of raw materials, technology companies providing smart infrastructure solutions. Now, let's talk about something that might not be obvious at first: commodities. During a recession, prices for raw materials like oil, metals, and agricultural products often plummet. Most people see this as bad news, but for the wealthy, it's a golden opportunity to buy low and sell high later. Check this out. During the 2020 pandemic crash, oil prices went negative for a bit. Yeah, you heard that right. Negative. Some clever investors actually got paid to take oil contracts. Fast forward a year and oil prices had skyrocketed. Those who had the cash and storage capacity to buy when prices were rock bottom made an absolute killing. The same thing happens with metals, agricultural products, and other commodities. The rich use these downturns to stock up on raw materials. Alright, for our last point, let's talk about two strategies the wealthy use: investing in sectors that thrive during downturns and scooping up distressed assets. It's absolutely mind-blowing how some industries actually grow during a recession. Take discount retailers or streaming services, for example. The rich who spot these trends early can make a fortune while the rest of the market is struggling. Then there's the strategy of buying distressed assets. This could be anything from foreclosed homes to luxury items that people are forced to sell. During tough times, you might see rare art, classic cars, or high-end watches hitting the market at bargain prices. The wealthy, with their deep pockets, can snatch these up and hold on to them until values recover. It's like getting a Ferrari for the price of a Honda. If you have the cash, you can score some insane deals. And there you have it, guys. 14 absolutely insane ways the rich get richer during a recession. It's mind-blowing stuff, right? From government bailouts to buying distressed assets, the wealthy have a whole playbook for turning economic disasters into opportunities. Now, I'm not saying all of these strategies are fair or ethical, but understanding them can give you a new perspective on how money moves during tough times. If you found this video helpful, smash that like button and hit subscribe for more eye-opening content. And remember, when it comes to finance, knowledge is power. Stay savvy out there.